So how do you take £20,000 out of your limited company tax-free? Well, check out this video as I go through all of the details. Before we use limited company, the one thing I want to show you is if you had a net profit of £100,000, you'll see the tax bandings there, but in a sense, you will have a tax liability of £27,500 if you have net profit of £100,000. I'm ignoring section 24 because that would be a killer to do the workings on, but it would be more potentially. So I'm just going to say it's 27,500 based on someone with unencumbered properties, or the 100,000 is taking into account the mortgage interest relief cap issue anyway. Now, the thing about limited companies, I'm going to do a comparison now of that 27,500 tax that's in your own personal name versus what will be deemed in the company if you was to go that way. But what I want to go through with you is what money can you take out of your limited company from April 2020. So this is really up-to-date information that you could use. So you can take out of your company £8,788 tax-free as you as an individual. You could take that tax-free and national insurance free as well. Now, I know there's been some changes in regards to national insurances and saying, well, it's higher for employees, but you as a limited company owner would have to still pay some element of national insurance above 8,788. So my view, stick to 8,788 as wages per annum. So this is salary per annum from your limited company. It will be tax-free. If you have a director's loan account going to the limited company, you can charge your limited company between 6 and 8%, which is HMRC guidance, interest on the money you've loaned. So that technically means that you could take out £5,000 saving allowances by charging your company this interest, or you could have £1,000 interest as well, in addition to the 5,000 if you're a basic rate taxpayer, or £500 as a high rate taxpayer. So there's lots of things you could do with that as well. You could take £2,000 worth of tax-free dividends out of your limited company. And finally, which is very useful, don't hear many accountants talk about this, but why? Is you can take out £300 non-cashable vouchers in a given year. Now, what I would suggest you do is that you get your company to give you a voucher, £50 every month or so. So maybe every 6 weeks. So it's no more than £300 in a year. So your company, your legitimate expense could be where your company buys you John Lewis vouchers and gives you a £50 voucher every 6 weeks or so. And that you can spend that, and there's no tax liability, but it is an expense of the company. So there's a tax write-off from the company, no tax to you. Why is no one talking about this? I don't know. But anyway, it is something that you can certainly do. So, and this is my point. So you could pay yourself £9,000 for employees, but then you get this employer's national insurance charge. So I wouldn't do it. My view is pay yourself a salary of £8,788 from your limited company to you as an individual. Now, it does depend. If you have other taxable earnings, this probably doesn't apply, but I'm telling you the things you could do if you have now all of your properties inside of a limited company. So it just gives you a bit of a comparison. So tax-free wages. So remember here, you've got tax-free wages of 8,788. You can take £3,712 worth of dividends to get to your personal allowance. Now, you should know your personal allowance is £12,500. That remains in 2020. You don't have any tax liability at all. So that dividends is below the personal allowance, but it still means you can get an additional £2,000 worth of dividends as well. So from the company perspective, you've got this £100,000 worth of profit. You've got wages, 8,788, less the interest, less the vouchers, gives it now a profit, a reduced profit. You can see all these costs now coming out of the company. You will note that the dividends is not here. And that's because dividends is not a tax deductible. It's after tax is paid, then you can distribute the profits. So it's not a tax reducer in this regard. Only the wages, only the interest, only the vouchers. That gives a restated profit before tax of 84,912 in the limited company. That will remain at 19% tax. By the way, I have to say, throughout this week, I was quite frustrated because before the votes took place to elect the Conservatives into power, one of the things that Boris Johnson said was, well, I will reduce the corporation tax to 17% if you vote me in. And then he stuck it at 19%. I'm not really, as a Conservative voter, I was quite frustrated with that. But now I have to look at what him and Rishi Sunak have been doing this week. And I got to go, I will pay you 3% more, you know, because these guys are legends. They are such, I give them such respect for putting this economy back on where it needs to be with this coronavirus. And they look tired, man. They look, I mean, I feel tired. I've been building these slides and following them and putting, but they're doing all the work to help us in this country. And I'm totally appreciative, and thank you to Boris and so thank you to Rishi to doing that. So the fact that they haven't reduced corporation tax, man, I don't care. Take that 2%, utilize it for the greater good, because that's what it's there for. But anyway, that said, the net profit now can be taken as dividends. Now, here's the kicker, because what you will do is, I'm going to ignore that. Here we are. What I want to show you is you're going to take all of this money out of a limited company. So you've got tax-free wages of 5712, which is now the excess of personal allowance, etc. Now, the problem is with this is if you're taking money out of your limited company, you are going to have to pay dividends tax. So if you're saying, well, okay, I'm going to say the excess of £20,000 worth of dividends, I'm going to have the rest taken out of my limited company. Therefore, I've got this 7.5% tax liability. I've also got the 32.5 tax liability, and the excess become a high rate taxpayer. Me as an individual, if I want to take all this money out of a limited company and not leave any money inside that limited company in excess of the original £20,000, I've now got to pay an income tax liability of £13,197. So we've gone now from this thing of having own income or own name, we've got a income tax liability of £27,500, as we said before, by having the properties just in your own name. But if you want to use a company and have all your profits in that, but you want to take out all of the remaining money that's in that bank account for your own personal lifestyle, well, I've got to say to you straight away, you'll be leaving with less cash than if you kept everything in your own name. Let me restate this. If you had £100,000 of property profits in your own name, the maximum amount of tax you would pay is £27,500. I appreciate I might have gone quick, so I'm wary of time. You can rewind. But if you had your property company earning £100,000 and you sucked out all the money, so you got tax-free income of £20,800 plus the excess of up to £68,000, so you suffer income tax on those dividends. The company's paid £16,000 worth of tax. So now net position, you're worse off. And don't forget that I've already said that the disbenefits of a limited company is the fact that you have to pay an accountant to do it. Your buy-to-let interest rates are going to be slightly higher, even if they are getting more competitive. And you've got this ordeal of dealing with confirmation statements, ATED reports, blah, blah, blah. So this position would say it's a waste of time. Okay, using a limited company, if you stopped this video, you'd be feeling dejected. So don't worry, there is a positive to this. But if you're using your limited company to extract every single penny for your lifestyle purposes, don't bother. You may as well keep it in your own name, have unencumbered properties, and live off it, and just have the 40% tax band as a highest rate of tax that you'll pay, unless you're an additional rate, which would be 45% if you're over £150,000. But ultimately, using company structure only works if you keep money inside the company. There are things you can do with it. The company, with the money that you leave in, let's imagine that you didn't take out that, you're happy to take $20,800 out of the company. You and your spouse, your partner, happy to live off that money. The remaining $68,000 that was inside that limited company, you might want to invest it inside in new properties to grow the wealth inside that company. You might want to invest in shares. Now, Louise and I invested money straight into the shares when the stock market, we saw the stock market go below 5,000 points. Well, what a bonus. Let's get in there now and make some money, right? We may take advantage of the situation. Stock markets will go up at some point. They may go down to 4,000, okay? I don't care. But they won't go bust. They will go back up to maybe the 6,000, where I kind of think that the FTSE 100 should be. I'm not a financial advisor, but 7,000 was a crazy valuation for FTSE 100, in my opinion. But 6,000, it's way short now of that. So I've invested money in shares. That's something you could do. The company could invest in pensions. So let's not forget, at some point in time, we're going to retire. You could use your company to put money into your personal pension, and it would be a tax reducer for the company. And it then goes into your pension for you tax-free, which is good. You could use your money inside the limited company to save for medical treatment. So if you need a medical annual checkup, if you're over 40, do it. Go to a private GP, get a private certificate done, and then you will have that paid by the company. Or keep in business bank. That should say bank. Keep in business ban. I don't know. Is it a business ban? Should we be banned from using limited companies? That's not what it's saying. It is a safe. So maybe that's giving you a connotation. I think it's just fallen off. It's given up. It's listened to me too long. It's just, and then the K's gone. K's gone. I knew him well. So keeping the money in the business ban. Well, why not book a call with me, Simon Misiewicz, your finance tax director, for at least an hour to understand how we can help you grow your business without paying the tax.